A trend-following system built entirely around adaptive volatility bands just got a serious upgrade, and this breakdown walks through exactly how the smart trend filter confirmation engine decides when a trend is real versus when the market is simply chopping sideways. At the core sits a chandelier-style trailing band derived from ATR, but instead of a static multiplier, the band width is dynamically scaled using a combination of ATR weighting and normalized price movement, with that movement itself clipped using a 95th percentile filter to prevent outlier bars from distorting the calculation. The midpoint reference for the band isn't raw price either, it runs through a selectable adaptive smoothing layer, offering a choice between a Kalman filter, using configurable process and measurement noise parameters, or a llama-style efficiency ratio filter, which adjusts its own responsiveness based on how directional recent price action has been. This smooth value becomes the anchor point from which the upper and lower volatility bands are calculated, and trend direction flips only when price closes beyond the trailing line, causing that line to ratchet in the direction of the trend. What makes this system stand apart is the 6-layer confirmation stack sitting on top of the raw trend flip logic. A stall filter measures how much the trend line has moved relative to ATR to catch sideways drift. A slope filter applies linear regression to the trend line itself, normalizing the slope against volatility to detect when momentum is flattening out. A volume filter compares current volume to its moving average, while a range filter uses percentile ranking of the high-low range to identify compressed, low volatility conditions. A basis point filter measures the trend line's rate of change in relative terms, and an ADX filter screens for weak directional strength using the directional movement index. Any one of these 6 conditions can flag the market as flat, suppressing new signals, unless a breakout override detects an abnormally large price move relative to ATR, in which case the filter stack is bypassed entirely to let the system react to genuine volatility expansion. The result is displayed through a gradient-colored candle overlay that visually communicates trend strength based on distance from the trailing line, alongside a full on-chart dashboard showing real-time filter states, ADX readings, volume ratios, and directional bias, plus an optional trade-level visualization module that plots ATR-scaled stop-loss and 3-tiered take-profit levels for structural reference. Configurable webhook alert payloads round out the system for those studying automated execution architecture. Educational takeaways *. How adaptive smoothing, Kalman versus efficiency ratio filtering, differs from fixed-period moving averages in reducing lag while preserving responsiveness. How percentile-based clipping helps normalize volatility inputs against outlier price spikes. Why layering multiple independent flatness conditions, slope, volume, range, momentum, reduces false signals during range-bound conditions. How a breakout override mechanism can be structured to intentionally bypass filter logic during genuine volatility expansion. The mathematical construction of ATR-based risk tiers for structural reference points. Warning: educational software for analytical purposes only. Trading involves significant risk.